Hey, what's going on, Hustle Nation? Today we're going to be talking about how to invest in technology stocks. If you're familiar with the QQQ, we're going to talk about another Investco fund that's very similar, but just a tad bit better, and that is the QQQM. Now, let's go ahead and dive right in and talk about the differences between the QQQ and the QQQM. Really, there's not many. It holds the same companies. Exact same weighted, everything is the same except one very important factor, the management fee, right? The fees on any ETF is probably one of the most important things that you want to take a look at when you're considering buying an ETF. It's not a major thing. I mean, if you invest in the QQQ, that's great. The difference is the QQQ has a 0.2% management fee, and the QQQM has a 0.15. So we're talking, $5 for a $5 difference for $10,000 you have. So the QQQ 0.2. So you can pay $20 a year for every $10,000 you have. Whoop-de-doo. They're very, very low. So either way is fine. Either way is fine. If that's not a big difference, that's okay. We'll go ahead and dive right into the QQQM real quick here. So if you're not familiar with either one, these are the same. The only difference is, like I said, expense ratio on the QQQM is 0.15. Everything else is the same. Let's go ahead and take a look at the profile, what you'll be getting. So what the fund invests in is at least 90% of the assets in the Nasdaq 100. Okay, so the 100 of the largest domestic and international non-financial, so you're not getting financial stocks, listed on the Nasdaq stock market. Okay, so what are in these? Let's look at the top holdings. Okay, you got Microsoft, Apple, Amazon, Nvidia, Meta, that's Facebook, Alphabet, which is Google, Tesla, Broadcom, Pepsi. Year-to-date return as of June is 33%, which is really, really good. It even has a small dividend, which is just icing on the cake, right? Let's look at what's in there. Okay, we looked at the top holdings just a second ago, but let's look at it's all stocks. Consumer cyclicals 14%. Technology. Okay, you're investing big time technology. Half of this is technology. Another chunk is communications and consumer cyclicals. So let's look at what's in here. So this shows the top holdings. Let's go ahead and go into Fidelity. And if you don't have a Fidelity account, I would highly suggest going into getting a Fidelity account. So as you can see, for 6 months it's on a tear. For a year, this year, 1 year, it's doing great. 5 years, doing good. So it's a pretty new fund. So if you want to see the historical performance, it's probably better to go to the QQQ. You'll be able to see 5-year. Look at that. Boom. And you'll see from 2022 to 2023, we got a big dip. So we're starting to buy now. Looks like it's going up from 2023. Big increase, but very good fund. So as we said, these are the top holdings and the percentages: Microsoft, Apple, Amazon. Now we can look at all 100, the top holdings we talked about. Let's look at the top 100. So you got the best names, right? Best names in the non-financial: Microsoft, Apple, Amazon, we talked about those. Broadcom, Pepsi, Costco, Cisco, Adobe, AMD. You might have an AMD processor in your computer right now, right? Netflix, you're probably watching Netflix. T-Mobile, Comcast, TI, Intel, Qualcomm, Amgen, Starbucks. You might be drinking your Starbucks right now, right? All these big companies, right? All these, O'Reilly's, probably worked on your car. Moderna, you got some drug companies in there. Kraft, you probably bought some mustard or ketchup. Biogen, power companies, Microchip, Walgreens, got some pharmaceuticals in there, pharmacies in there, energy companies. So the performance: 1 year 13%, 3 years 14%, 5 years 16%, 10 year 17%, life of 9%. Not too bad, right? Distribution yield 0.63, so a little bit of distribution, not a big deal. Analyst rating is an A, which is really good, but we don't really care about the analyst rating. We really don't care about technical indicators. But we talked about okay, so let's talk about It's mostly in North America, mostly United States companies. We talked about the holdings, market cap, giant companies, mostly large companies, and a few medium-sized companies. Definitely a large size. And we talked about the sector exposure a little bit, but let's talk about it again. IT, communications, consumer discretionary, healthcare, staples, industrials, utilities, financials, energy. I guess a little bit of financials, but mostly not. Most of the industries, software 19%, semiconductors 18%, technology, hardware, laptops such storage, that kind of thing 12%, media 12%, retail 7%, even cars, probably Tesla, right? Tesla's included in there. Biotech, beverages, hotels, and entertainment. So got a little bit of everything in there, so it's pretty diversified, except for financials. Distributions, you can see that the distributions are paid pretty well. Looks like it's trending upwards, a little bit down on 2023. Tells you when you get paid. Looks like quarterly, June, September, December, March. Talk about the returns. So the main difference just is the 1.15 price to earnings. Price to earnings a little bit high, but that's what you're going to be paying for such a great performance stock ETF. I'm not too worried about it. Just, I buy whenever I get paid. Dollar cost average. So there you have it. That's a quick one on the QQQ and the QQQM. If you're wanting to invest in technology, you can get these from any brokerage. Fidelity, I would recommend. I'm not sponsored by them, but maybe I should be if anyone from Fidelity is listening. Robinhood, I'll leave a link in the description below. I think you still get free stocks if you sign up for Robinhood with my link. You can get an E-Trade, Ameritrade, Schwab, anywhere. Any brokerage out there will have the QQQ and the QQQM. Either way, if you want to squeak a little bit more out of it, get the QQQM like I am. But either way, it seems like a sound investment, but I am not giving investment advice. I'm not a financial advisor. Don't believe a thing I say or anything that anybody on the internet says. Do your own research. See if it's something that you would consider, all right? So that's a real quick one anyways. Give me a like for the YouTube algorithm. Leave me a comment below. What fund or ETF or even individual stock you would recommend for technology, all right? So share this with someone who loves investing. And as always, I wish you much success in your finances and in life. Peace out.